This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
In the SBR syllabus, you are expected to have an understanding of the interpretation of financial statements and also alternative performance measures. In many subjects, you've met stakeholder analysis. The only thing I just want to remind ourselves about for the moment is that when we think about stakeholders in the business, investors are probably most excited in profit or the P&L, whereas lenders and suppliers and so on are probably more interested in whether they will get their money back. So lenders and suppliers more interested in the soft P, the short-term survival of the business, and the long-term. I've just pulled up the recent accounts of Marks and Spencer's, which is a UK-based retailer, and I can see if I look here at the profit and loss account, you need to look at the third column. If I was an investor, I would be excited, I suppose, that the company has got revenue of 10 billion, roughly, and on that they've generated a profit of 186 million. And probably you can see from there that as an investor, you might actually be a bit cross, because if you sold something for 10, just if you round down a lot, imagine you sold it for 10,000 and then made a profit of 180, you wouldn't be feeling great. But profitability is where investors look, isn't it? So they would probably be writing on the school report, could do better. Lenders and suppliers are most interested in short-term survival and long-term survival. So I'm not going to get into a big ratio calculation here, but here's the balance sheet of Marks and Spencer's. So I'd be interested in their level of payables. I'd be excited about their borrowings. I'm just seeing if we have any other borrowings. Yes, we do in the long term. There you are. And you can see, that's about 2 billion worth of borrowings, isn't it, roughly? What are their assets? I can see above. They've got tangible assets of, well, for a start, 4 billion up there. So I don't think they're going to go down tomorrow. But that's just a reminder that different stakeholders look at different statements for different reasons. So the investor is potentially primarily interested in the profit and loss. The lender, the supplier, is probably more interested in the soft P. When you studied financial reporting, you studied the ratios and how to calculate them and what that actually means. I'm not going to go through those ratios now. Two reasons is you've seen them not only in financial reporting but other subjects, and also because any question would be more about, is ratio analysis useful, than about calculate 100 ratios. So we won't be asked to calculate lots of traditional ratios, but you must make sure you know the formulae for the main ones. I've listed them down there. In our Open Tuition financial reporting lectures, again, we've got all the formulae and we've also got the lectures. So if you had an exemption from FR and perhaps you're a bit rusty, you might spend an hour or so looking back at those just to remind yourself what sort of things those ratios do.